Inflation rose above 2% in March 2021 and has persisted above target ever since. It has not come back down, not once. 63 consecutive months and still counting. That is how long US inflation has stayed above the Federal Reserve's 2% target. That is not a blip, but a structural failure. US inflation hit 4.2% in May. We just told you its highest level since April 2023. Well, that marks the third consecutive monthly acceleration. Energy prices are surging. Food costs are climbing. Prices today are 24.3% more expensive than before the pandemic began in February 2020. Well, the Fed's response, inadequate. And most importantly, the institution knows it. Jerome Powell left office on May 15th with inflation above the 2% target for 5 straight years. His era will be remembered for one defining misjudgment, calling post-pandemic inflation transitory. That call cost Americans trillions of purchasing power. Well, as of December 2025, the Fed was assessed as being at risk of losing its inflation-fighting credibility entirely. Rate cuts were still being pushed through even as prices stayed elevated. Well, the signal to markets was damaging and the 2% target is negotiable. Now, politics compounds the problem. Kevin Warsh, who replaced Powell, has stated a preference for lower interest rates than the current level. Markets are watching and bond traders are pricing in a Fed that may blink again. Tariffs have added new fuel, contributing to rising prices on durable goods and food throughout 2025. The Iran energy shock is pushing costs even higher. The 2% target was once a credibility anchor. Today, it reads more like an aspiration. The Fed has not just missed its mandate, it has normalized missing it, and that is what markets should fear.